What is a vendor take-back mortgage? Buying or selling real estate but traditional financing is tough to secure. There is an alternate that benefits both parties. It's called vendor take-back mortgage or VTB. It's not as uncommon as you think. In a VTB, the seller becomes the lender. Instead of the buyer borrowing everything from a bank, the seller takes back a portion of the financing. The buyer pays down payment and sign a mortgage agreement with the seller for the balance. Example, if the property is 500,000 and the buyer has 300,000, the seller may offer VTB for remaining 200,000 at agreed upon interest and terms. It's registered like any other mortgage and often bridges gaps for buyers who do not qualify for full bank financing. Why it matters? VTBs help sellers attract more buyers, often at higher price, and can be especially useful in commercial real estate or slow markets. But both parties need a strong legal advice. It's not just a handshake deal.
Vendor take-back mortgage, FAQs. Is a VTB secured like a regular mortgage?
Yes, it's registered on title and legally enforceable.
What are the risks to the seller?
If the buyer defaults, the seller may need to foreclose. So terms should be carefully drafted.
Can it be used with a regular bank mortgage?
Yes, the bank must agree and usually takes priority on title.